Hello everyone, and welcome back to Accounting Insights with Rula. In the preceding videos, we explored the nature of business transactions, what they are, and how to analyze them, and why each one affects the accounting equation in a specific way. We used the accounts to show the impact, focusing on understanding the why behind each entry. But now it's time to move from understanding to recording. Because royalty accounts help us visualize the effects of transactions, they don't tell us when a transaction occurred or provide the full details of what actually happened. That's the job of the General Journal, the official chronological record of every business transaction. It's where the accounting story truly begins. In this video, I'll guide you through how to record transactions in the General Journal, what each part of a journal entry represents, and how to post these entries to the General Ledger where your financial records take shape. So let's get started. Imagine you are keeping a personal diary, but instead of writing down your thoughts or feelings, you record every important action your business takes. That's exactly what a journal is, a chronological logbook where we document a company's financial transactions and events as they occur. Each entry includes a shorthand notation indicating which accounts are involved and whether they are being debited or credited. Think of the journal as the starting point of the accounting process, where everything begins in the exact order it happens. The General Journal resembles a notebook filled with detailed transaction entries line after line, page after page. However, that is just the first step. Once these entries are recorded, they are transferred to the ledger, our second step. If the journal is akin to a diary organized by date, the ledger functions more like a filing cabinet where information is sorted by category. Instead of flipping through pages to find your sales or expense data, everything is organized into separate files or T accounts such as cash, revenue, and expenses. Now, the process of entering these original transactions into the journal is called journalizing. It relies on evidence such as sales receipts, purchase invoices, and check stubs, essentially any source data that verifies the transaction took place. Journalizing is a vital step. It lays the groundwork for the ledger and ultimately the company's financial statements. Now let's take a closer look at how to record entries in the General Journal. First, we enter the date of the transaction to establish a timeline. In the description column, we list the account to be debited first, followed by the account to be credited, which is slightly indented for clarity. To the right, there is a column labeled PR, short for Posting Reference. This is where we will later write the ledger number once the entry has been posted to the ledger. After that, we have the debit and credit columns where we record the corresponding amounts. It's crucial that both sides are equal as every journal entry must remain balanced. And finally, we include a brief explanation below the entry. This note helps us remember the reason for the transaction and provides context for future reference. Moving forward, this is how I recorded the initial transactions in my company's books when we were just starting out. The first thing I did on January 1st was invest 20,000 dinars of my own money into the business to get things going. This capital represents my personal contribution, so I recorded it as a debit to cash and a credit to Rula capital. This reflects my investment in the company. At the end of the month, I paid 1,200 dinars for our office rent. Since this is an expense related to the operations of the business, I debited rent expense and credited cash. On February 2nd, I withdrew 800 dinars from the business account for personal use. This withdrawal isn't classified as a business expense, rather it's a personal withdrawal. Therefore, I recorded it as a debit to Rula drawings and a credit to cash. Each of these journal entries helps keep my financial records accurate and up to date, adhering to the double entry system. In the next slide, I will show you how I posted these transactions to the general ledger so you can see how the balances are tracked in each individual account. Now it's time to take the next step in the accounting cycle, posting. So what exactly is posting? Think of it like organizing your journal entries by category. Instead of having everything jumbled in one place, we now sort each entry into its proper account. In accounting, we transfer information from the general journal to the ledger. The ledger is where we group similar transactions, whether it's cash, rent expense, or owner's capital. This helps us track the balance of each account and see how each transaction fits into the bigger picture. Here's a quick example to show you how this works in action. On January 1st, we recorded in the journal that Rula invested 20,000 dinars into the business. So we credited Rula capital and debited cash. Now, during posting, we take that transaction and move the details, date, amount, and description to the appropriate ledger accounts. We go to the cash ledger and post 20,000 dinars on the debit side dated January 1st. Then we go to the capital ledger and post 20,000 dinars on the credit side, also dated January 1st. Notice the reference numbers. The 11 from the ledger is placed in the journal and vice versa. This is called the posting reference (PR), and it helps us track where the information came from and where it went. It's a neat way to keep everything connected and traceable. Now let's look at January 31st. Rent was paid 1,200 dinars. In the journal, we debited rent expense and credited cash. When posting, we post 1,200 dinars on the debit side of the rent expense ledger on January 31st, and 1,200 dinars on the credit side of the cash ledger. Finally, on February 2nd, there was a withdrawal for personal use. We debit drawings and credit cash. Posting means 800 dinars goes to the drawings account on the debit side and 800 dinars goes to the cash on the credit side. So as you can see, posting is all about organizing your financial story by account. The journal tells us what happened and when, and the ledger shows us how it affects each account over time. By the end of the posting process, you'll have a clear picture of how much cash you have left, how much you've spent on rent, how much capital the owner has invested, and more. Thanks for watching and stay tuned. Until then, keep learning, keep organizing, and remember, accounting is the language of smart decisions.